Hello everybody, and once again welcome to Synonomics, the Money Machine. Well, what a fantastic year it was from the equities perspective, from the stock market perspective. I covered that in my previous videos as well, where I kind of compared the indices of the multiple countries, especially US, Japan, Australia, and India. In this episode, I'm going to talk a little bit about India because there's a lot of happening there, just like USA. Next year, there will be a general election for India as well. And I'm going to talk about it, how it's going to impact the stock market. Well, before I go there, let me remind you, India is actually the fastest growing economy in the world. Recently, that actually confirmed the trend at 7.6% GDP growth, guys. Yes, whereas the other countries are hovering between negative to around 3-4%, India is going to have 7.6%, and even the World Bank and the International Monetary Fund IMF, they have been forecasting something around 6.5 to 7% for India, not only this year but also in the coming few years. So that makes India a much better place to invest. Some of you who are from India, you should be considering investing in India, and some of you who are not in India and want to get the benefit of the emerging markets, guys, India is the only one now, because in the emerging market it used to be China, the leader, which has been going through tough time lately. Brazil, Russia, all these are like a little bit dicey to invest in. India, on the other hand, is more transparent. And guess what? The most important thing is that if you want to take money out from India, you can do that. Having said that, for many of us, like retail investors, you don't really need to go to India and invest directly in those shares unless you are of Indian origin. You should be actually looking at EFTs or some of the funds, Morgan Stanley Emerging Market Fund, iShare Fund, etc., or the EFTs. There are plenty of EFTs out there, guys. Well, without further ado, and at the risk of not digressing more towards why you should invest and all those, let me come back to the topic. So Indian market has given a stellar performance, just like other markets of the world. Just to highlight that, S&P 500 actually this year, another 2 years or 2 days are left now, by the end of before the 2023 finishes. But S&P 500 as of yesterday, that was 28th of December 2023, has given 25% return, by the way, 25% return. Nasdaq, on the other hand, has given 45% return, guys, and I'm talking about Nasdaq Composite. Nasdaq 100, on the other hand, has given pretty much 55%. Nikkei 225, that's Japanese index, has given 29 to 30% return this year. Nikkei is back in flavor. Many of the investors, US investors, are actually investing in Japan now after they got stuck in China. Well, ASX, Australian Stock Exchange Index, has actually been lackluster. It has only given 10% increase this year. Lowest of all, the one that I'm covering today. India, on the other hand, has two main indices, Nifty and Sensex. Nifty 50 is the index for 50 top stocks, and that has given a return of 20%. Just yesterday, it actually closed at 21,700. Sensex, on the other hand, has made new record of 72,000, guys. Sensex is an index of 30 stocks, and that has given a return of 18.5% and has hit 72,400. Well, if you look at the different components of the Nifty, that gives you the sectoral view. So in India, as I have covered that in past as well, the first 100 stocks are the large cap stocks. 101 to 250 are the mid cap stocks, and 250 onwards, there are almost 7,000 stocks listed. So 250 to 7,000, they're all under small cap stocks. Having said that, the growth opportunity for these small cap stocks are much larger when the market is in the bull run. But beware of that. Be careful, because when the market goes down or retracts, these small caps are the one which gets hardest hit. Well, Nifty has multiple sub indices, and Bank Nifty, one of the heavily traded index, has not done very well. They've only given 12% interest, sorry, 12% return. And next year, everybody is thinking, including me, is thinking that they might be giving a much better return next year because they have not performed much in 2023. Having said that, the private banks have not performed. The public sector banks have been skyrocketing. So Nifty PSU banks has given 32% return. And I'm talking about, these are sub indices, by the way. So Nifty PSU bank, they have given 32%. And because of the Prime Minister, Mr. Modi, he has been heavily investing in the public sectors with the theme of Make in India. Even the defense sector and everything, India is very much like heading towards self-dependent, actually, pretty independent. So all those things earlier, even the rifles and the minor stuffs used to be imported from multiple other countries, from USA, from Russia and other places. Now everything is getting manufactured in India. So the defense sector has actually been growing fast. And not only that, with the discipline that has been inculcated in all these public sector companies, which used to be the most efficient one. And they were actually hovering at around price to book of less than 1, price earning ratio of 1 or 2 or even less than 1, because nobody used to bother to buy them because people had no faith in these companies. Now with this turnaround in the government's outlook in the last 9 years, things have become quite different, and these public sector companies have become like blue chip now. Everybody wants to have a piece of it, and everybody was underinvested in that. And when I'm talking everybody, I'm not talking about retail, I'm talking about the institutional investors. All the institutional investors were owned in these stocks, and now they're just buying it like there's no tomorrow. Well, to give you the flavor, I talked about Nifty PSU banks at 32% growth this year, and Nifty total public sector banks are pretty much at around 78%, guys, and that includes all of them. And actually the total market cap of these public sector units have actually tripled, or more than tripled. It used to be like 14 lakh crore 3 years back. When I say lakh crore, means something like 14 trillion rupees. Now it's pretty much at 46 lakh crores, means 46 trillion rupees. So it's more than tripled, or almost there. And this looks like this run will continue for the same reason I told you. From all the perspective, from the price to book, from the price earning ratio, they are underpriced, undervalued. So the value investors, institutions, they are just grabbing them at any price. Well, I was talking about the large cap, mid cap and the small caps. Large caps have not performed well because we have not seen huge foreign influx this year. And of course, when the interest rate in USA is at 5%, who will go and invest in India, where there is some slight of currency depreciation as well? So the large caps have not performed that much, but when it comes to mid cap and the small caps, and let me refresh your memory, the companies from top company to top 100 companies are large cap, 101 to 250 are small cap, and 250 onwards are all, 101 to 250 are mid caps, and 251 onwards are all small caps. So Nifty mid caps have performed 45%. They've given a return of 45%, guys. And if you have invested in the small caps, Nifty small cap 100 index, that has given 55% return. Again, if you look at the different sectors, that's pretty much like that. Realty, for an example, has given 78%. I talked about the PSU units, 78% return. If you look at the healthcare sector, so Nifty healthcare, that has given almost 32%. So healthcare and the pharmaceuticals were kind of depressed earlier, now is coming back in flavor. So from all the perspective, even from the FMCG perspective, of a fast moving consumer goods like Nestle, Britannia, Hindustan Unilever, etc., Dabur, Marico, all these have actually given 24% return. Well, to cut the long story short, Indian market, though it has not performed overall as compared to S&P 500 or NASDAQ, but overall the return has been pretty okay. Now, let me take the next step, and I want to talk a little bit about how it's going to be in 2024. Is this bull run going to continue, or you are going to see a retracement? Is it a bull run or is it a bubble? Of course, some of the sectors of the stock market is a little bit overpriced, guys. PSU sector is one of them. Defense is another one. Similarly, all those that I talked about, realty 78%. So some of these looks like, a little bit, of course, they were depressed for a long time. Infrastructure, realty, power, defense, these are the star segments in flavor. So they may not give the returns like what they have given this calendar year, like 78% for realty, 78% for public sector, but looks like that will continue. And as I had talked about in the beginning, one of the big catalysts is the general elections. Yes, there will be general elections something around March to April timeframe in 2024, and the whole country is gearing up for that. So what I have done, which has been done also in many of the channels also, so to analyze how the market has performed in the previous general elections. And I have taken like from 1999 onwards. And because this is a very India specific analysis, so I'll not go and explain the parties and all those that came to power, right? So what I have done, and I've looked at 6 months before the election and 6 months after the election, how much the stock market has performed. And in 1999, when NDA came in power, and NDA is, by the way, the same government which is right now. 6 months before the election, the stock market actually rallied 36%, guys. Yes, you heard that right, 36%. And after the election was 4%. So 6 months before the election in 1999, 36% return. After the election, 6 months after, 4%. So the two windows we are talking, 6 months before the election, 6 months after the election. Well, 2004, when UPA came in power, dominated by Congress, 6 months before the election, it was 9% growth. And 6 months after the election, another 9%. Interesting. 2009, again the same government got repeated. UPA, the Congress-led government. And 6 months before the election in 2009, the market actually had a superb run, 31% gains. And after the election, in the next 6 months, it actually returned 38%, guys. You heard that right. So 2009 was a fantastic year. And if you remember that, Lehman crisis and everything had happened in 2007-8. So the market was going from a very, very, very low pace, low bottom. So The market had already collapsed in 2007-8 due to the Lehman Brothers crisis. So it was starting from a very low base, and that's why you're seeing that in 2009 elections, 6 months before that was 31%, and 6 months after the election was 38%. There was a whopping almost 70% run. But as I mentioned, it was starting from a very small base. Well, things got changed drastically in the investment world when this Modi government came, the BJP came. They're called NDA. Remember when I started that in 1999? 1999 NDA government was there. Again, they came in power in 2014. And just to remind you, when this government came in power, Sensex was trading at around 16 to 17,000, and as of yesterday, it has closed at 72,400. Yes, guys, almost 4x plus. Well, in 2014, when NDA government came, 6 months before the election, the stock market actually gave 19% return, 19% return. And after the election, for the next 6 months, it also gave 16% return. 2019, on the other hand, was a little bit lower than these, but still again the NDA government got repeated, BJP government got repeated, Mr. Modi continued to be the Prime Minister, and the market actually gave 11% return in the first 6 months, but in the later it actually gave 2% return. Now 2024, when the election is coming, looks like everybody is sure that this government will repeat. Having said that, nobody knows what will happen, right, in these kind of elections. But let's assume that whatever happens, this trend of the 6 months before and 6 months after will continue. So I have actually taken, if the election will be around March, April, I have taken what was the index, and I'll take Nifty 50, which is a broader index than Sensex. So Nifty 50 on the last day of October, 31st of October, was at 19,100. So you heard that right. It was at 19,100. So if I look at that 6 months before the election, and even if I take the best case scenario that was the case before, there was a 30% growth, remember, in 2009. So if you take 30% growth there, you are going to see this index going from 19,100 on 31st of October 2023 to roughly 24,800, guys, almost 25,000. So from 19,000 to 25,000, that's the journey everybody is expecting, including me, that's what the stock market is actually give as a return before the election. So 25,000 is the ballpark figure. It can be 26, it can be 25, but after the election, if the same government comes in, the market will continue to run, of course with some up and downs and all those. That's what the nature of the stock market is, but it will continue to run for another maybe 2,000-3,000. So if the same government comes, Mr. Modi becomes the Prime Minister again, I think you are seeing the market to reach, the Nifty 50 to reach something around 27,000-28,000 by the end of next year. Before the election, you are going to see 25,000. Having said that, 22,000 is not far. Just yesterday, on 28th of December, Nifty has closed at 21,770, almost quarter to 22,000, guys. So that's the analysis for that. Now coming back to the sectors that I talked about, let me remind you, I have actually covered that the Indian market in 3 different trenches. In one video, I had covered FMCG, all the fast moving consumer goods. I had covered Nestle, Britannia, and Hindustan Unilever, Marico, Dabur, ITC, all of them. In the second one, actually, I had covered all the defense stocks, and I'll repeat some of these segments because these sectors are still in flavor. In my opinion, they will continue to be in flavor in 2024. And the third one, I had covered a little bit about IT sector, especially the one who are involved in the EV and kind of automotive, auto sector, especially in the electric vehicle segment or autonomous vehicle segment. And there I had talked about Tata LXI, KPIT, etc., etc. So, well, I think that the market looks quite bullish, and as I shared with you, the growth in Indian market has not been as good as the other countries. For example, Nikkei has grown 29%, Sensex has only given 12% return. Nifty though has given 20% return, but still is quite lower than what even S&P 500 has given, that is 25% return, guys. From the sector perspective, I think these sectors will continue to be in flavor. Public sector, including railways, defense, public sector banks, pharmaceuticals, FMCG, these are the stocks. Banking is another, especially the private banks, they have not performed that much in 2023. Probably that will come back to flavor in 2024. Well, guys, all these are actually my personal opinion, and please use that for education or entertainment purposes. If you have to invest in any of those, which I highly recommend, don't forget to consult your financial advisor before making any investment decision. Synanomics is out there to create financial awareness so that you can analyze the companies you are interested in yourself and make the right decision to make money. I'll come back again with similar interesting episodes. If you like this kind of content, don't forget to like, share, and subscribe. Well, I'll come back again. Happy New Year and happy investing for 2024. But you'll see me a few times before that anyway. Well, it's time to say goodbye for now.